All right, y'all. Today we're gonna be doing a breakdown on Thursday, May 15th, the Nasdaq trades. What happened? I am creating a new series called Inside the Mind, where I go through my thought process, actually reviewing my live performance. So on these trade breakdowns, I'm not going to get too critical on my thought process anymore. I'm just going to get straight into what the optimal trade should have been. So when I do these breakdowns, sometimes I'm not going to actually have been taking these exact trades, but I do want to go over the optimal trade that I would have taken. All right, if just so I can try to make these videos a little bit shorter. All right, so let's jump straight into it. I'm looking at my 4-hour. This is at 6 a.m. right? I'm seeing that I can't show y'all exactly right there because of the 4-hour time frame, but basically I'm seeing that we got a level of support right here coming from this bullish fair value gap, and we got resistance right here for the most part. And that's, yeah, we got two touches right here, so this is some good resistance, and we got support right here at this level. But, okay, it's not preschool. I said we're not a preschool. It's okay, but I appreciate your sincerity. All right, so now we're going down to the 15-minute time frame. We're gonna mark up London's lows, and we marked up London's highs right there, right? So from this point, I can go ahead and scale down to my 3-minute chart. All right, I just really wanted to make sure I got that level marked up as close as possible. So we can see coming to the chart at 9:30, we came and we swept out London's highs, and then the market started to shift towards the downside, right? Right here at the macro opening, we didn't have any news today. So right here at the macro opening, right at 9:45, we came back up into this level. Did it leave us a fair value gap? It did leave us a small imbalance right here. I don't know why the indicator isn't picking up this fair value gap, but it did leave us a bullish fair value gap a bearish fair value gap right there. That's crazy. So price came back into that level. It came back into that order block, and then it shifted down. So ideally, that was an optimal entry going in early in the macro. We can see we got our manipulation right here. We can see we got our liquidity sweep right there. We can see the market structure shifted to the downside after it took out this liquidity at the market open. We shifted back into this order block. We shifted back into that fair value gap, the bearish fair value gap, and then we immediately got momentum coming down. We wicked up, and then we came down right at the start of the macro open, right? So that would have been the optimal entry, to be honest, right at the open or below this level at this displacement, because at that point price would have been seeking the liquidity from these lows, at least these lows. So if you gain your entry from right here, if you get your entry from right at the break of that candle, or even right here, you're still in a position to catch at least 40. I like catching 40 to 50 points. So if the move don't make sense to make 50 points, then I don't even really want to take it for the most part. All right. I don't even really want to take it, but this was my original trade. But the optimal entry would have been right here, seeking the liquidity from those lows, right? Even in sell side liquidity. So let's just go run through that. If you would have gotten your entry aggressive right here, you could have caught at least definitely 50 points with your stops at like 25 points above that candle. It's easier said than done though, because you really want to wait for confirmation. So realistically, this would have been more of the entry with the stops like right here above the displacement candle, right? So it really could have been tighter, but that would have been a perfect. That really would have been, but it's like I don't really care for that trade too much because of RR. But it would have been the optimal entry just considering the macro opening and the volume and the volatility that it offers. But I probably wouldn't have taken the trade, but it's the optimal entry though. That's the entry that I actually took. And on my episode of Inside the Mind, I go into detail about, how I could have performed better with taking that trade. So I'm not going to go into that. I kind of got stopped out right there. Right? Now, I came into the day with a bullish bias. I got stopped out of that trade. I entered kind of late, and I took a note down. Where's that note? I'm sorry, right here. I took a note down explaining what happened, explaining how I got stopped out of that first trade because I didn't wait on the break and retest of a fair value gap. I entered too early. So if we're looking from a 3-minute perspective, once I got displacement from this candle and we were at these lows, I didn't wait for price to give me some type of fair value gap to enter off of. I just jumped straight in as soon as we went past these lows, which is probably a reason why I got stopped out, because I basically became liquidity, right? And as we see, I had originally a bullish bias, but I was just too eager today during my trading session and too impatient during my trading session. So I winded up taking an entry right here at the lows where all the liquidity is at, and I become the manipulation. But being that I had a bullish bias, right, I was able to pivot. And change my bias up to a bullish bias for the draw and the liquidity. And we can see that price came to this level, right? So now we got our sell side and buy side liquidity sweep right here at these lows, right? We got our manipulation right here that played out, right? We see from that wick to that wick, we got that manipulation playing out. We got a bearish fair value gap now that I didn't wait for it to get it retested on the 3-minute, and if we test it, we get done. See, had I waited for this 3 minutes chart to play out and not see, the thing about trading in 3 minutes, you can't really have FOMO, but it's clear and concise. I'm not gonna lie, you can't have FOMO. You can't be afraid to miss out on a trade, right? We inverse this bearish fair value gap, right, at that 3-minute close, and now we create a bullish fair value gap, right? What does price do? We shift structure right here. This is my pivot point. If we scale down to the 1 minute, we can see the market structure shift a little bit better. We shift structure right here at that 3-minute pivot point. We create bullish displacement right here at this candle. And the bullish displacement, along with the break and retest of that 3-minute fair value gap, so the displacement of this candle right here, this green candle, along with the break and retest right here of that bullish fair value gap, was a good signal to enter, right? Then we got our play action above that candle. We're seeking the liquidity from London's highs. That was already going, but now the highs in the market, the most recent highs where the buy side liquidity was resting, we see the market swept that, and it went right at our resistance level, and you could have gotten 40 points for a good 1-to-1. Now that was 2 trades, so I'm dead ass not even gonna go over the third trade that we could have taken, because those I'll mention it, but that's what I'm going over on my episode of Inside the Mind about the decisions I'm making and how they weren't the best. So go watch that, because I'm not trying to make this too drawn out. But on this second optimal entry, the best thing to do to have gotten more points and to get a better RR on this trade was to take an aggressive entry right here at this bullish fair value gap. So now your RR went from 1 to 8 to 1 to 4, and you went from 40 points to 60 points. So that would have made the most sense for me and how I like to trade, and you could have had your stop losses below this candle, right? And you still, or even if you wanted to just put it below here, right? Because if it goes below here, it's no imbalances in nothing right here. If it goes below here, then we know we're pretty much cooked. But even if you wanted to put it right there, you still would have had a 1 to 3. If you wanted to be safe, you still could have had like right at a 1 to 2. Right at a 1 to 2, you would have caught your amount of points, and probably would have been more satisfied. You just would have to be very, very confident and trust in this aggressive entry if you put like a market order right here. But the safer entry, of course, was right here. Really, really safe entry. And you just would have to understand that you're getting in the move later, so you have to get out of the move earlier, especially with this liquidity right here and this resistance right here. So that's basically it for today. Had I been a little bit more patient, this first trade shouldn't have even been taken, because I didn't wait on this fair value gap to get tested correctly. So had I been a little bit more patient, I could have took the ping pong too, because I'm seeing that we wicked at this level. We got a bullish closer, and then we got a market structure shift to the downside right here, and then we got a candle closing below it. So I definitely could have caught this trade right here. You see, this trade wound up going for a good 1 or 2. So that would have been a good trade as well, catching this sell. It is, but it's right on time, and it's still on it. It's right at the second half of the macro. So either one of these trades would have been good. Honestly, I'm not gonna lie, those were like really the two optimal trades. That first one was really some bullshit, because I was getting impatient and watching the 1 minute, knowing the 3 minute offers me smoother trade. So yeah, that's my trade breakdown for today. Nothing too crazy, pretty good breakdown, and I'll see y'all on the next one.